You've seen the clickbait on YouTube and on the news that the housing market has a bad future. It's not looking good. It's going to crash. So much mixed news out there. What's right? What's true? What's happening in the local San Jose housing market? Well, I'm Theresa Wellman with Homeowner Experience Real Estate, and we're going to dig into a review of 2023, lessons learned from then, and what I forecast in 2024. So looking here, the past is behind, but we can learn from it. The future is ahead, so let's prepare for it. And the present is here. Let's live it. Thank you, Thomas Monson, for this quote. We're going to start looking back at our 2023 review and what we learned from the past. First off, many experts forecasted that 2023 was going to have a huge price drop, maybe even a crash. There were intelligent discussions and debate about crash versus a stabilized market, and that was partially because in 2022, interest rates went from 3% to 6%. They doubled, which they've never done in under 12 months. So everyone was on edge of what was going to happen in 2023. Inflation was also high and the economy was in question. So all of these factors came together with very mixed emotions for 2023. But what actually happened looking back? Well, in the San Jose housing market, we saw from January to October a 10% increase despite continued rising mortgage rates, as well as an unstable economy and inflation that was out of control in 2023. So yes, this has been a very interesting record year and some lessons that we can learn from 2023. Interest rates did increase throughout 2023. That really did put a damper on the market, and they peaked in October, the end of October, early November at 7.8%. Ouch. If you look at this chart though, you see since then we've seen a huge quick decrease that back to basically where we were almost at the beginning of the year. So that is good news looking forward. The biggest difference between 2023 and prior years is that mortgage rates were over 6% for the entire year. But the last time that happened was 2008, when prices were only on average $700,000. And today's San Jose real estate market is on average $1.7 million. So quite a different price point to compare with these higher interest rates. So what effect did that have on the market? Well, buyers felt the pinch. Many could not afford to be in the market anymore, and yet most of the others stood on the sidelines waiting for rates to go down or prices to crash when they could jump in. The bad news is, as we shared on the last slide, rates did go up, but prices also did go up. So it was not a time to sit back and watch the market because it did not do what people thought it was going to do. It actually got more and more difficult to afford. But the good news, again, is that rates have improved in November and December, and moving forward, we expect that to continue to happen. Now, what did those high over 6% rates throughout all of 2023 do to our sales numbers? Well, they definitely took a hit. Peak sales were in 2021, very similar to what we saw in 2015, but not since then. And then in 2022, sales were down more, and 2023 sales were down even more to a record low. Our 10-year San Jose average sales are 4,800 homes, and in 2023, we only sold 3,100. A huge significant decrease to our normal sales volumes. Yes, those buyers felt the pinch, or they sat on the sidelines waiting for the market to change. The 2023 market was still a really good market, and how is that possible? Well, here, inventory was extremely flat. Buyers were frustrated with their lack of choice. Sellers just didn't move forward in putting their home on the market. Our peak inventory was in April 2023 at just 268 single-family homes in all of San Jose. If you look back on previous years, we've never seen a peak that low before, never had a peak in April before, and never seen numbers so low throughout the entire year. Even during the pandemic, we followed a little bit more traditional bell curve, not peaking very high, but peaking way above this 268. So not only did we have a record low number of sales, but we had record low inventory. Taking both of those volumes down kept our market rhythm pretty interesting. Now, why was our inventory so low? Well, we were missing a huge segment of sellers, primarily move-up buyers, who are usually a large percentage of the market. they just didn't move last year. They didn't want to get rid of their 3.5% interest rate to buy something in the 6 or 7s that was a move up already. It just made financially very difficult to move up last year. So the sellers who were selling in 2023 were people who had inherited the home, people who were retiring out of the area or cashing out, or maybe lifestyle reasons like a divorce. So despite less buyers and less sales, like I mentioned, the market was still competitive. So what do I mean by that? Well, first off, the average for the entire year of 2023 was 104.5% over the list price. So homes sold quite a bit over asking price on average. And the hardest part, as I mentioned, was rates continued to increase through the end of October, as well as prices continued to increase 10% from January to October, making it really tight to get in. I had a buyer jump in the market in March 2023, make an offer on a house that ended up being so competitive, they lost out. They ended up buying a property in October. And can you believe it? The change in 5.5% interest rate from when they were looking in March to over 7% in October cost them over a $1,750 a month difference. Also, that property from March to October that they ended up buying went up $50,000. So not only was it interest rates, but the prices appreciated, and it took a big hit on their pocketbook every month. With that kind of cost and that kind of increase, who possibly could have been buying in 2023? Well, what I saw were young households, first-time buyers, maybe who didn't know much difference between a 6.5%, 7% rate versus a 3% rate of a few years ago. There were also tech workers who had significant stock options to put down as down payment money. Now, the stock market did well, and the S&P 500 did well in 2023 with a 15% increase from the beginning of the year to the end. And that put just more money in those buyers' pocketbooks. Now, I want to point out something here. This is the S&P 500 with the Santa Clara County average home price. And as you can see, generally the trend follows each other, meaning the trend of the stock market and the housing match each other. There's a couple spots where I've circled in yellow where they tend to go the opposite direction, but here at the end, I'm pointing out another huge discrepancy where prices saw a decline in the seasonal time of the fall and the stock market continued to appreciate. So we've got these two lines going in completely opposite directions, which is one clue already that we're probably going to see a change in our home prices come 2024. So what are some of the patterns of 2023 that we can learn from and look forward into 2024? The first one is that lower inventory than sales equals overbidding and market appreciation. So even though 2023 was a difficult market for buyers with high interest rates, low inventory, and not many sales happening, we saw appreciation because as you can see with this San Jose chart here, there's only a few instances where this yellow inventory line is actually lower than the sales line. And that seems to not really make sense. How is that even possible? Well, it's possible because homes are selling so fast that we just are not keeping inventory on the shelves, if you will. We can't keep things stocked because things are just continually selling and going pending so fast. So as you can see, we saw that in 2017, 2018, and we saw a huge appreciation in prices. In 2021, we saw the same thing going into 2022. Then interest rates greatly changed and it dropped that market and that buyer demand. But then we had a similar type environment all through 2023. So prices again appreciated, and the overbidding, which I'm depicting here between the orange average price line and the adjusted amount of overbidding of the line below. So basically this delta here is how much buyers are overbidding and how it picks up throughout the year. So as you can see at the beginning of the year, we saw a really sharp trajectory and increase in the overbidding, and it maintained throughout most of the year. In 2021 and 2022, that was a huge gap of 8 to 18% over asking, which was quite crazy. What do we need to watch in 2024 to know what direction the market's going to go? Well, as you know, I do a monthly housing report, and these are the items that I'm going to be keeping watch on. The first is going to be mortgage rates, of course. Are they going to improve more than the 6.375 that we're seeing today? That's for the jumbo 30-year fixed mortgage. The feds are expected to reduce interest rates, the federal funds rate, not the mortgage rate, but the federal funds rate 3 more times in 2024, probably about once a quarter. And now that decrease in federal funds rate doesn't directly influence the mortgage rates, but it does have an effect on it. So that could be positive news for mortgage interest rates going through 2024. We just don't know when exactly we're going to see those benefits and changes, but we can be thankful that we have seen some improvement since that peak at the end of October 2023. So our best case is that rates get back in the upper 5% range by the end of the year, and that those sideline buyers that have jumped out to watch and wait for the market to crash or rates to go down might realize that that's not going to happen so significantly and start jumping back in as affordability gets a little bit easier. Move-up buyers who have less of a gap in their interest rates are probably going to start making some moves, and so we should be seeing some of that inventory coming to the market of those move-up buyers, which will provide more starter housing for people to purchase. That's great news. Now, the worst case is rates are going to stay in the 6 to 6.5% where we're seeing them today, and we're going to have a very similar buyer pool today. Now, I want you to continue to stay tuned on this channel, subscribe or like. I do have 3 listings coming up before February 15th, so I will know the actual pulse of what buyers are seeing and feeling and how many buyers are out there shopping, how the multiple offers are working. So you're going to want to stay tuned so you can get that insider information. So the second factor that I'm going to be watching in 2024 is going to be that inventory, of course, because if our inventory stays low, we're going to have a big supply and demand imbalance because we've already got an increase in demand with that improvement in the interest rates. And I think there's some pent-up demand that didn't get satisfied in 2023 that's going to try to make a move in 2024. Move-up buyers and sellers will hopefully make more of a move in 2024, adding more inventory as well to the market there. So the best case is our inventory goes back to a more normal inventory that we expect to see in San Jose and follow more of that traditional bell curve that on the yellow line I showed, and that we'll have a more balanced market between buyers and sellers. I'm going to say the worst case is that inventory continues to stay low and that we have that strong imbalance of supply and demand, and we're going to have strong overbidding, which if you're a buyer, that can be a very worst case. It gets difficult and prices appreciate quickly in that kind of environment. So definitely subscribe to our channel, like or comment below if you like this information and are finding it valuable and want to stay tuned as to what's happening in the local San Jose market. So what is our prediction for 2024? Well, I've got 3 points here. So first off, inventory, I think, will be back up to a more normal number, definitely exceed our record lows of 2023, and buyers will be out increasing the sales for 2024 as well. So I expect a little bit more healthy market in 2024. Buyer demand is going to come in really strong in January and February. As you can see here on the chart, when we have a record low December inventory like we do right now, 108 homes in San Jose, we had 88 back in 21, 22, and 99 in 2017, 2018. We saw huge appreciation these years right out of the gates in January and February, and I expect that to happen and follow that same Q1 pattern after that very low December inventory. And third, I expect a healthy price increase year over year for 2024. Because of this supply and demand and likely a strong seller's market, we're going to see overbidding again, likely prices at 105% or even more, but not like what we saw in 2022 of up to double digits, like 10, 11, 12, 13% over. I don't expect it to go that crazy, but I do expect the year to end about the normal average of about 8% appreciation for the San Jose housing market in 2024. So my advice to buyers is to buy sooner rather than later, because interest rates are, as they drop, are going to bring more and more buyers into the market, and it's just going to get more competitive, which means prices are going to appreciate. So the more you wait, the more you're going to pay and the harder it is going to be to compete for a property. And really, the interest rates dropping that you might be waiting for will probably be counteracted by rising prices. So there's no reason to not just buy now and move on and have hopefully less competition than you will in a few months. Sellers, my advice to you is to prep your property and be ready for your transition plan. Do you need to turn around and make a purchase yourself and are going to be buying when it's a really competitive market? Then you need to be making a move sooner rather than later and getting your house listed for sale. The wild card, of course, is going to be when and how fast that inventory will get to market and how much competition you will have. So we should discuss your plans and your options. And we have a seller seminar coming up where we talk about high level, what you can do to prepare. Or if you'd like a personal consultation, we also offer seller consultations and buyer consultations as well. Thank you so much for listening. I really appreciate your attention. If you like this information or have questions, please do comment and like. Thank you.